Press the bell icon on the YouTube app and never miss another update.
Stewart and Mackertich Wealth Management Limited operates as a financial services company. Today, we bring to you three stocks which are their top picks for wealth creation going into the year 2018. Now, each of these stocks has a lot of rationale going behind why they think this could be the eventual multibaggers in the year going forward. So please watch this video to know more. Now, the first company on the list is Indian Hotels Company Limited, which is available at 120.85, and this company is a holding company engaged in short-term accommodation activities and restaurants and mobile food service activities. The company is primarily engaged in the business of owning, operating, and managing hotels, palaces, and resorts. Now, the reason why Stewart and Mackertich thinks this could be a wealth creator going forward is primarily because of three reasons. One is its undisputed leadership in this particular industry. The second is the hotel industry is seeing the beginning of an upcycle. And the third is because the valuations seem reasonable going forward. Now, if you were to look at the 1 year chart for the company, you would see that there was a spike towards the initial part of the year, but when the problems with the Tata Group began, it had a dip. But recently it's been rising a bit. The market cap is 14,346.45 crores, which means that it's a mid-cap stock. The EPS is 0.92. The EPE here is 131.36, but that is higher because it is coming into an upcycle, and here the PE is supposed to improve quite substantially. The industry PE is 61.95, and the book value is 34.54, which makes the stock trade at a price to book ratio of 3.50. Now, the promoter holding here is 38.65, and one important factor here is this company is from the Tata Group, and with the appointment of the new group head, a lot of things have changed for the positive in this sector. Now, the second company on the list is Bharat Forge Limited, and Bharat Forge Limited is engaged in the business of steel forgings, finished machined crankshafts, and front axles, assembly, and components. The company segments include forgings and projects, which includes capital goods. Now, if you were to look at the reason for why which Stewart and Mackertich thinks this could be a very positive company going forward are things like it is setting up a new greenfield project, and there's a very positive outlook for MNHCV and PV vehicles. Now, if you were to look at the 1 year chart for the company, you would see that it's a beautifully uptrending stock, and the market cap here is 32,912.46 crores, which makes it a large cap company. The EPS here is 15.36, which means that the company is available at a moderately expensive valuation of 46.02. The industry PE here is 64.74, which means that the company is cheaper compared to the industry standard. The book value is 90.89, and the price to book ratio here is 7.78. Now, the promoter holding is slightly on the lesser side at 45.74, and the dividend yield percent is 1.06. Now, one important factor to note here is this is in a sector, auto ancillaries, where there's a lot of growth expected in the coming years ahead. The 52-week low is 382.33, whereas the 52-week high is at 749.95. Now, the third company on the list is Jindal SAW Limited, and which Stewart and Mackertich believes will be a major turnaround story going forward. Now, it's available at 114.55, and the target price for this company is at 160. The Jindal SAW Limited manufactures and supplies iron and steel pipe products, fittings, and accessories with various manufacturing facilities in various countries, including India, the United States, Europe, United Arab Emirates. The company's segments include iron and steel products and ocean waterways. Now, the major rationale behind trying to project this as a wealth creator going forward is the growing turnaround story of the internal operations. And this company has been doing steady business over the last few quarters and has improved their margins considerably. There's also a global surge in oil and gas prices, which will help their export operations. Now, the valuation also is not very expensive and is ruling below industry PE of 23.89, and the company PE here is 11.49. The book value is 174, which means that the company is trading well below its book value, and the price to book ratio here is 0.66. The company is a mid-cap one, and the promoter holding is decent at 53.59. Now, the 52-week low for the company is 47.50. Now, friends, one important factor to inform you, as we always do, is that these are not our thought processes. We are not recommending for you to either buy or sell them. Thanks for watching, and we will see you soon with another video.